would like to welcome all of those in the audience and all the commissioners present. Persons wishing to present oral testimony, if you have not already submitted your registration form to my commission aide, please do so now. Otherwise, please raise your hand to indicate your desire to speak at the time I call for additional speakers, following the testimonies of registered speakers. Each speaker is limited to a 3-minute presentation on all items. Each speaker may testify for him/herself and may not speak on another's behalf. Written testimonies, including the testifier's address, email address, and phone number, may be posted by the city clerk and available to the public on the city's DocuShare website. As a courtesy, please put your cell phones on vibrate mode or turn them off during the meeting. Thank you. Our commission is being recorded in an audio-only format. To increase the accuracy of the digital minutes, I request that commissioners and others identify themselves before speaking. Thank you. Okay, so on oral testimony and agenda items, the commission will now take testimony on all the items on the agenda. We will call on testifiers in the order in which your name was submitted. If you have not yet signed up, please do so now. Sign-up forms are on the table as you entered. When your name is called, please approach the testifier's table, state your name and the item on which you are testifying, and whether you support, oppose, or have comments on the measure. You will have 3 minutes in which to speak. Your cooperation will be greatly appreciated by all of us so that everyone will have a fair chance to testify. The first speaker is Barbara Jesse. Hi, Barbara.
I'm not used to this. Is this fine?
Good, great, yeah.
Okay. My name is Barbara Jesse. I live in Eva Beach. I live in a condominium in Eva Beach. And this is regarding a reduction of real property taxes for senior citizens at the age of 71 years. So it may be a little shocking, but I will read it if that's okay. First, I want to say I really appreciate the opportunity to come here and talk to you all in person to give this testimony. This is regarding a property tax reduction for all homeowners on Oahu who have reached 71 years of age, regardless of income and any other restrictions. Most older people remember the thought of the golden years to come, the time after retirement when we can play and we can just enjoy ourselves. So let the golden years begin here without worry of increasing taxes and the freedom to either stay in your home or sell your home and move to any other part of the island without the fear of raising property taxes. Hopefully, too, this would bring about the end of the ongoing annual application for property tax relief for most people, as this is a burden as the years go by so fast, one year right after another. So it would be good if that would be eliminated for most people. So let the golden years begin with this property tax reduction. It is rather shocking if I haven't mentioned it before. This would be the lowest the lowest tax that Hawaii has to offer, and it is $300 a year, regardless of income or any other restriction. So given that I've heard you shouldn't complain without giving a solution, here is a solution that I have thought. I believe giving this freedom of low property taxes for people over 70 would result in more homes vacated to people on Oahu who wanted to purchase and that would probably be homes of every level, valuation level. For instance, I live in a condominium. I bought it in 2003, and it was the lower part value at that time, and it still is. But my property taxes have increased 57% since I turned 71. I'm 79 now, so I anticipate they could go on and on and on, and this is hurtful. So anyways, I would say that I think that this would free up homes on Oahu for those who want to buy, but I think that the property taxes should probably be, the mayor's not here, so the property taxes should be lowered for everyone, because it's such a hard part of the budget. And I would like to say that I've read that there are many people across the United States, I don't know what percentage, but who are not paying their property taxes. So I was thinking that if the city had an office that would assist people who are behind in their property taxes and give them options to pay their taxes. I'll give myself as an example. As a single mother, I was living in our family home in Kaneohe, and it was really hard I just maxed out the credit cards, to pay bills and so forth. And I refinanced more than once, and this was a really good move for me, and it worked, and I came through. So there are options, So also there are, I don't know what percentage, but of people living in other states who have bought real estate here. And I think that assessing higher property taxes than what's done here would help to offset any loss of income from this, applying the $400, the $300 limit to retirees over 71 years old. So that's it, and I thank you very much.
Thank you, Jesse.
Thank you.
Commissioners, any questions for the testifier? Okay, hearing none, thank you.
Thank you.
The next testifier is Rob Rito.
Hi, Rob Rito. It's primarily on Bill 49, but I had an introduction that I wanted to go through before that, because my focus here is fairness and transparency in the assessment process. I have an initial question. As an advisory commissioner to the council, I'm interested in what your mandate is. I know you were advising the council on how to raise revenue. Are you also advising the council on how to look out for the taxpayers' interests? I hope someone will answer that question. I don't need the answer now. As a homeowner, my primary concern in this area is to see that we homeowners are treated fairly in the taxing process. As I stated in the valuation committee session earlier this month, in my view, the process, it seems there is a lack of fairness and openness in both the assessment process and the appeals process. My property assessment went up 52% last year. Consequently, I researched the assessment of 19 other properties in the neighborhood and found, with 3 exceptions, all the properties went up between 29 and 52%. And looking further, I found that all but 4 cases, the land value went up 4%. The aforementioned properties went down 15 to 20%, which I still don't understand. Note that the increases in assessed value in the buildings went up from 64% to 604%. This is the building value. Okay, the property values just went up 4%. I have data with me if you want a copy. Here I would ask if the model they refer to took building parameters. In almost all cases, no renovations have been done. How did the model account for such changes in the building values? I and many neighbors went to a meeting with our councilperson and representatives of the tax office to try and understand the process and what grounds to use for appeal. We were told that there was a model. We feed information such as lot size, house age, amenities, comparables, and the model gives an assessed value. The representatives from the tax office would not give us any information on how the model worked or any information on what important information to bring to a tax appeal. Since nothing changed significantly on any of the properties, it seems only the comparables we used to reevaluate the process. And the comparables that they used were not in our neighborhood. They were a quarter or half a mile away. I did not go to the appeal meetings with my neighbors, but many of the neighbors did, and none of them had a successful appeal. I wonder in general how many appeals are successful, and of those, how many use professionals for the appeal. To me, any rule or regulation or law, whatever it is enacted, should be understandable to the layman so there is a complete understanding of how the rule works, or law or regulation. In looking through the real property tax code, I found only one limit on assessments. The assessed value of 10% greater than appraised value, again, appraised value requires a professional, was the specific grounds for appeal. Other than that, any appeal is subjective and up to the appeals group to say yay or nay. Okay. Bill 49 is an attempt to put a reasonable limit on runaway increases in assessed value and subsequent taxes to homeowners. There should be a focus, to protect the aging homeowners on fixed income from being forced out of their homes. On Bill 49, there has been pushback on the concept of limiting assessed values. As an alternative to this, to allowing assessed values process to continue, an alternative to this is to allow the assessed value process to continue as it is and limit the actual tax paid by the taxpayer to not increase over 2% over the prior year. This eliminates the provision of the bill that deals with improvements and replacements. I'm hoping that you look at both sides of the issue when taxing these homeowners, and the rules and regulations you make are open to understanding by all. Thank you for your time.
Thank you. Commissioners, any questions for the testifier?
Thank you.
Rob, I just wanted to
Yes,
clarify one thing, your question about the commission's charge and authority.
Yeah, the mandate, correct.
Yeah. According to the resolution establishing the commission, we are charged with conducting a systematic review of the city's real property tax systems, methodologies, classes, exemptions, credits, and minimum property tax, using such standards as equity and efficiency. There's nothing in there about maximizing revenue, so I just wanted to make that clear.
Okay, you used the word equity. Can
Yeah.
you expand on the word equity?
Equity means fairness. You could have horizontal, vertical equity as to rates, classifications. We can go into this for a long time, so we can talk about it after the meeting if you want.
Okay, thank you for answering that. I appreciate it.
Thank you very much. If there are others wishing to testify who have not signed up, please raise your hand and line up to your left behind the testifier's table. Okay, seeing or hearing none, we'll go into our subcommittee meeting reports. At an earlier meeting, this commission formed 3 subcommittees, one devoted to valuations, one to classifications and rates, and one to credits and exemptions. The subcommittees meet between the commission's regular meetings, consider a set of ideas, and formulate and draft recommendations. The subcommittees then give updates of their work at each full commission meeting. So our first committee report is from our valuation committee. I understand that the valuation committee has met, and if at this time I could have the committee chair, Commissioner Natalie Iwasa, present her report.
Thank you. Yes, Natalie Iwasa for the record. So I did send the report to all commissioners, I think yesterday morning or late the other night before that. So I just will highlight a few things. We had a professional appraiser come who provided some general information for us on valuation processes and services that they provide. One thing he stated is that he thought that the income method might be suitable for industrial properties, office buildings, and retail properties. But he did note that in the private industry, they just do a single property at a time, whereas at the city level, they do mass appraisals. We also had Stephen Takara and Gary Kurokawa attend the meeting, and one thing that they noted was the income approach may be used in appeals, and I think that was a question that the commission had earlier. With respect to the cost approach, as the testifiers stated, there are about 100 different attributes that they look at: pool, whether it's close to the ocean, view, that kind of thing, how many bedrooms. And so I had enclosed with the report a sample MK127 report, which shows some of the attributes that are available on at least this sample property. And then so we are aware that the city is using the Marshall and Swift formula and tables for the cost method. Those costs are updated annually when representatives from that firm come to Honolulu. They interview developers, they go to stores, they look at prices that are currently being in the market, and then they put those into their tables. As far as the sales methods, the city still uses that, comparables, and they get that information from the Bureau of Conveyances. Every sale comes over here automatically, and then the city takes a look at those sales to make sure that they're at arm's length and not just, say, for example, transferring from an individual to that individual's trust or something like that. Let's see, with respect to the income approach, we did ask whether that would be viable or how that would work at the city level, and they stated that when discussions came up at City Council last year for Bill 11, that the testifiers brought up the concern that they would have to be providing the income, disclosing their own income to make that whole process work. We also discussed caps on values, and Bill 49 we had discussed at a previous meeting, and we didn't support that method because the whole premise is that we value, if we don't know the values, we don't know what we're giving up, and it might be possible to actually look at a cap on the tax rather than the values. And then with respect to one of the main reasons we were formed was to look at the process of valuations that is used at the city level. And as you know, at the prior commission meeting, we were told that our questions wouldn't be answered. A few of them were, but the information we requested was not provided. I enclosed copies of the denials that we got. The questions that we posed in writing weren't mainly not answered. And so I wanted to state for the record what I had requested through FOIA requests, because I felt that, trying to put it through a law like that would be, it might be better, because we wouldn't have to worry about trying to work with City Council and trying to get them involved, or any other method. So initially I had asked for the CoreLogic contract, and that was denied. And I thought, well, maybe it's because it was under Marshall and Swift. So then I asked for the manual, the RFP solicitations, and current or most recent contract with Marshall and Swift, or contract or agreement, and that was not, that was denied as well. And then another request I had made was for the contract or agreement. That particular request I didn't even get a response to. The time has lapsed on that. So I have been working with somebody as far as what is required. Well, let me back up. When I got the second denial, I did ask for the agreement and any correspondence with Marshall and Swift that would indicate that that manual is somehow proprietary or confidential to the level that they can't even disclose it to us. I haven't gotten a word back on that. That was, I believe, Tuesday morning that I asked for that information. So as I understand it, when government makes decisions that impact taxpayers, the public has a right to know the basis for those decisions. And so this information, I feel, my understanding is, should be turned over to us, and it hasn't been. So that is the main reason we are recommending for the Commission's consideration to, at the very least, request that the city put basic information on their website so people understand what is the valuation process and what can they do to learn more about it. That's my report.
Thank you, Commissioner. Was there a discussion on public education for transparency purposes and how we would convey all this to the public? Or?
Yeah, well, it was kind of toward the end of the meeting, but basically to put it on their website, what methods they're using. They could potentially include a sample of this form on there. I mean, there are a lot of different options on how they could do that. We didn't discuss a lot of specifics on that.
Okay. So, Commissioners, this is what we need to do today, as we just have one more meeting before the final report is due in December. So what we'll do is go through each of the topics discussed by Commissioner and address each issue separately and ask for discussion and input by the other commissioners. And then we'll decide whether, each issue gets incorporated into the final report. So I'll take first the issue about the income methodology and whether it is used by appraisers to value commercial real estate, and knowing that the city does not use this for mass valuation purposes. Are we open for discussion and questions on this topic by anyone? Okay. Hearing none, then we'll move on to Marshall and Swift valuation, procurement, and implementation by the city. Marshall and Swift service provides data that is used for a comprehensive cost data approach for mass appraisal of real property. Commissioners, we are open to discussion and questions on this topic. Yes.
Commissioner Natalie Wassa, for the record. So I just want to state that I also spoke to an appraiser independent of the committee meeting, and my understanding is that this service provider actually is very, very reputable, that the data they provide is, pretty top-notch. They have a wide range of properties that they gather data from. So with respect to that, at least, it seems like there's a wide range of comfort in using them.
Okay. Any other comments?
Yes, Ray.
Yes.
I just want a clarification.
Commissioner Menti.
Yes, Earl Mente for the record, sorry. Marshall and Swift is used just for the cost approach. So they collect data on materials and cost of construction. But from what I understand that Stephen had mentioned, Takara, was that the city does its own market approach. Yeah, it's not contracted out. So they get the data from the Bureau of Conveyances and clean it up so that they can get fair market data and then use that to do valuations of the different neighborhoods.
Yeah, thank you, Commissioner. Yes.
Natalie Wassa. So that brings up another point I should mention with respect to the cost approach. It typically works better in places where there are newer developments, say Mililani, where there's a lot of similar type homes, and relatively new. Where in places where the properties are older or more unique, my understanding is that what happens is there's a component of depreciation that somehow gets estimated that wasn't determined or wasn't made known to us how that is done. And then the land also is separate. So when the city goes out to look at these values, they ideally would take a look at vacant land, but we know that there's not very much of that on the island. And so that particular component then is, I think, a little more challenging. And it's not very clear to me how, when they do these comparables on the sales, how they separate out that land value portion to then use as a kind of a base for the other properties.
Okay, thank you. Any other comments, questions? Okay, so we'll move on to Bill 49, which proposes that any increases in valuation of real property be limited to 2% per year with certain exceptions. So we're open for discussions and questions on that topic. Any questions, comments from anyone? And your position, your committee's position on that, Commissioner Iwasa, is opposed to that?
Right.
Okay. Yes.
Earl Ment again for the record. Just for the record, I just wanted to make sure that the recommendation that we are opposed to that is because we want to have the valuations all similar. Already there's classifications, different rates, exemptions, dedication credits. To change of the valuation would be, talk about transparency, easy to understand. It'll be a real mess for the average person to look and try to figure out how to even get the tax. So if we just have all the valuations at market, then they'll know, that's easy to understand, and they could look at neighbors and things like that and go backwards. And it's less complex if we just keep the valuations at market.
Okay, thank you. Anyone else? So we have one last topic for this committee, and that's the public policy on public. Yes, sorry, Commissioner
Amy
Hirano.
Hirano for the record. Earl, when you asked the city about that particular issue that you just made about the valuation of it, what was their response to that?
Specifically, excuse me, Earl Ment again for the record, specifically.
The market and the valuation thing.
The market approach to valuation, you know, they have their own formula, and basically they told us how they get their data on current sales, which is from the Bureau. They clean it up, and
Yeah, right.
being a realtor and
Right,
multiple
right.
listing services,
Right.
but they didn't specifically say. I mean, it's basically going to be looking at comparables in the neighborhood. They have, I'm pretty sure they have different data fields to input, like square footage would be important, right? Square footage, last square footage of the house, probably age, things like that, to determine the condition. But there are variables, and because it's a mass appeal, you know, they were saying it's, you know, and it's logical that it's too difficult to get very specific on each property. So the mass appraisal would be just for a general neighborhood. And
So basically, they're not going to take any of our suggestions at this point in time.
I hope they do. Well, the good thing is they're willing to, on appeal, take at least the income approach as a viable method of valuation, but that wouldn't help a residential property. Yeah.
Thank you.
Okay, thank you. Members, are there any other topics related to valuations that you would like to bring up or discuss at this time? We do have our department director, Stephen Takara, present, if you wanted to bring him up for any questions.
Mr. Chairman,
Yes.
Scott Higashi. I don't think there's any further testimony is required. I just want to mention that I think the Valuation Committee brings issues that it could bring given the information that was forthcoming, but a bulk of the questions were not answered by the administration, either in the full commission meeting or in the committee meeting, and that position was maintained. Therefore, I don't believe that the Valuation Committee is able to make more recommendations at this time because of the administration's position.
Okay, thank you, Commissioner Higashi. Any other comments, questions? Yes, Commissioner Iwasa.
Yeah, Natalie Wasa. So we did agree to recommend a policy on public education. So can we talk about that?
Sure.
No? Okay.
Thank you.
So as I stated, we didn't really talk about specifics. And I think I'm not quite sure what our timeline is, but I think this is really important, especially given the fact that we've had a couple people come before us, and people have contacted me. I'm sure they've mentioned things to other commissioners about questions on how the city is valuing the properties. Why is the land 4% in the house, whatever? And so I would like to ask that our committee get together one more time, and we could just do it via phone or whatever, just to make some points about what we think is really important for the city to share with the public and with the city council, and then we could bring that forth at the next commission meeting, if that would be okay.
That's fine with me. Anybody else have an opinion? Would the committee be ready to submit a draft report for review by the commission at its next meeting?
So when is our next meeting?
November 7.
Oh, that's like 3 weeks. Yeah,
Yeah.
I'm sure we could have something to, some bullet points, like we can get together in the next week or 10 days and put something together for you at least a week ahead of time.
Oh, before the November 7 meeting for
Yeah.
people to review prior to the meeting.
Right.
Yeah, okay, thank you.
Yeah.
Thank you.
You should have it. Is it Amy Hirano? Yeah, you should have it so that they can agenda it out. You should put it on the agenda. For
Yes.
Because-
Can we do that?
Yeah.
Yeah, thank you very much. Okay, so if we're ready, we'll move on to classification and rates. And so may I have the Committee Chair Kimura's report on that?
Thank you, Chair Kamikawa. Joy Kimura for the record. The Committee on Rates and Classifications did meet on October 14th. I submitted a very brief synopsis of our discussion. I just wanted to state that we are in, our committee is in, we discussed and agreed on the issue of taxing short-term vacation rentals at the hotel property tax rate, and we are supportive of creating a new tax classification category for bed and breakfast businesses. I also wanted to state we did discuss other issues such as possible taxation for credit unions and child care facilities. This is based on a previous Real Property Tax Advisory Commission to the City Council, and that was a recommendation at that time. So we reviewed it, and we are also in agreement with that. I'm just putting it out there for
Credit
possible
unions
discussion. Child care facilities.
Child care facilities. Okay.
This is Amy Hirano. Obviously, council has actually jumped the gun because they do have a bill that will be heard by budget. And it does recommend classification, considering a new classification for the bed and breakfast. And they are suggesting that TVUs be charged on the hotel resort.
So they stole our idea then. Yeah. Okay.
Well-
Thank you, Commissioner Hirano. And then you have another proposal also? Or did you consider the two-tier?
Oh, we
proposal?
put the residential A two-tier classification on the agenda in response to a request by Councilmember Kobayashi. So I requested it on the agenda just for discussion.
It was Amy Hirano, it was a memo
Yeah.
directed to us and a request by Councilwoman Ann Kobayashi that we discuss the residential area issue.
Oh, okay. Not
And that
the-
was never put on an agenda item. So we are putting it on as a courtesy.
I see. All right. So is there any discussion on that item? Yes, Commissioner Iwasa.
Yeah, Natalie Iwasa. So I have been very concerned with the residential A classification from before it was even called residential A, back when Mufi Hanneman introduced that non-homeowner classification. My concern is that we call it this investment property without recognizing that families live in those homes. And so if we're going to, currently now the tax below $1 million is 4.5, so it's already $1 higher per thousand than regular homes, and 10.5, so 3 times the amount of residential homeowners above $1 million. And the incentive then is for the city to keep putting more of those homes into that over $1 million assessed value. And over the time frame from when residential A first went into effect till this last report that we got, the number of properties has almost doubled. I've had people call me, there have been people who've testified that when their taxes go up to $3,000, $4,000 per year, they might be able to hold on for a little bit, but eventually those taxes have to be passed on to those tenants, and then you're talking, you know, a couple $100s a month, and that puts downward pressure on the rental market. So I have asked the city council multiple times to increase that threshold of the $1 million to something a little more reasonable, 1.2, $2 million, and I would like the commissioners to consider something like that as well as, you know, one of our recommendations. Thank you.
Thank you, Commissioner Iwasa. Any other comments or responses? Okay. We're now open for discussion on any other topics pertinent to the committee. Yes.
Can I call Stephen Takara to the speaker's stand, please? It's not going to be difficult, Steve.
Good afternoon.
Welcome.
Commissioner Chair, Vice Chair, and other commissioners.
Hi.
Stephen Takaro.
Again, Amy Hirano. Steve, I just want to ask you a question. Historic homes and credit unions, are they considered nonprofit?
No.
Okay.
Well, I mean, independently, there are some historic homes that may function as nonprofits, but it could be one or the other. But I think there could be a handful that choose the historic exemption over the nonprofit or charitable exemption.
Can you tell me what historic homes pay currently for their real property tax?
They're fully exempt for the portion of the property that's historic, including the land beneath it. But there are properties that have portions that's not historic. So in addition, that's not 50 years old, or that portion is not exempt.
So you're telling me that there's certain historic homes that pay no real property tax?
Well, they pay a minimum. So meaning that they're fully exempt, but the ordinance requires a minimum of $300.
Again, 200?
300.
300.
Yeah.
I just read recently in the paper that the legislature has given a tax credit to the historic homes when they do renovations to their
Yeah.
outside or whatever to restore or repair at that point in time. Would that not increase the value of a historic home?
I think that's an incentive to take advantage as far as to maintain such properties, meaning that they would have I'm not sure if this is the correct terminology, but like a tax break or some kind of relief should they remodel, upkeep the property. I don't know the actual mechanisms of the program itself, but I know there's some kind of a break. And I think it's a 5-year thing. And I'm not sure if it's just commercial or residential or both. And I think I kind of included it. I mentioned that in the first presentation. But yeah, there is I believe, a 5-year window.
Okay. Now, another question is, what kind of enforcement do you have to making sure that all the historic homes are complying?
So back in 2012, 2011, thereabouts, there was a big uproar, and it may have stemmed from previous commissions. So that was a big issue that nobody was watching them. So we made a big effort. So we have 2 compliance specialists that monitor these properties. So the bigger ones is the average condition and visual access.
Right.
Meaning that if there's hedges, trees, vegetation blocking visual access, which is kind of the sole purpose for the public to appreciate the architecture and the historic, components of the property, as well as, signage, plaque, and whatnot. The other caveat is if the property cannot be seen from a public way, they're required to open their property up every second Saturday of each month. And that's when our compliance specialists go out. So they get overtime where they allocate their schedule to investigate and actually go to the properties. It's called AVV, alternate visual visitation. I don't know. Anyway, those properties allow or they choose the public to actually go on their property to appreciate the historic aspects of that property. And we've actually revoked or canceled their dedication. It's actually a dedication. So we canceled the dedication and basically withdraw their exemption. And we've had a number that didn't maintain the average condition as well as the visual access, as well as opening up on the second Saturday.
Oh, okay, so there has been enforcement on that.
Correct, yeah. So in the last couple of years, well, since 2012, and, so it's been known in that community that we've been watching them and monitoring, and we've canceled several dedications, and we roll them back the whole 10 years. So it's pretty,
okay.
it's a pretty significant amount.
Thank you, I appreciate that. Thank you.
Chair. Yeah,
Yes.
Matthew Panaz for the record. So just a point of order, if we're discussing exemptions as part of this committee?
Yeah, we can wait for.
Move forward, or to continue discussing.
Sure. Yeah.
can Move forward.
I have a question on exemptions
Sure.
too, but we can wait for
Okay.
the appropriate committee.
No,
to
you
address
can-
the segment.
Or,
Well,
Are you willing to take questions now?
Yeah, just far away. I mean, but if you guys want to keep
Well,
it
I wanted to
per-
ask a little bit more about the historical.
Yeah, go ahead, go ahead.
Okay. Does the department actually do evaluation of historic homes then?
Correct, yes.
Right, oh, so there is evaluation.
Right.
And who issues that placard?
There is rules that there's basically, I don't know, a handful of things that need to be on the plaque. So there's a historic plaque, so I don't know if you guys visit,
Yeah,
there's 300
yeah.
and something, but then
I've seen
they
it.
gotta have the plaque,
Visual.
I guess,
yeah, right.
visually, I mean,
But you don't issue it.
No, so there's requirements of the plaque, and they submit like the rendering and the drawing, and then to us, and then they give it to a vendor to actually make it.
Okay.
Yeah.
You
so-
approve it.
Yeah. So we
That's right.
approve, I think there's like the name of the property,
Right,
the significance, the year built, I forget what it actually is, but
So, Steve, roughly how many historic homes are there then?
it might be in the report.
Oh,
I want to say like 350-ish, thereabouts. And
I mean, how many, do you get every year, several requests, a lot of
Yeah.
requests, or no, and how many of them are actually approved?
yeah, so good question. We've been getting increasing number of applications because there's older homes, so more in the eligibility. So before we used to get like 5, 6, now we get 10, 15 or so each year. And most of the time, because we rely on DLNR, that they've approved it and it's on the registry, then we kind of approve it as well. I mean, they got to meet certain criteria as far as set forth in our ordinance, but as far as deeming it as historical and on the registry, we rely on the state agency for that.
Okay, so it's not that easy to get, because that's a great way to reduce your property taxes.
Yeah,
Yeah,
so
we're just concerned that it's not going to be abused.
that was, I don't know if it was the last commission or previous commissions, they made an effort for such properties to pay 50%. I want to say 50% of their real property taxes in lieu of the minimum of $300. I don't know, Commissioner, you might have been on that commission, but
No, thank you. I just felt that there should be, especially the reason I brought this up again is because of the credit that and it has increased, it will increase the value of a historic home. And the bottom line is, when they sell it, it's pretty good, right?
yeah.
So I just thought of equity at this point in time, that I was suggesting perhaps we should charge historic homes a little bit more than $300.
And I think one of the problems, as I just mentioned, I believe it was 50% of their value, because, you know, they do utilize city core services, roads and whatnot, fire and, you know, public safety, you know, other core services.
Oh, Commissioner.
Thank you, Commissioner Mente.
May I say something?
Thank you, Commissioner.
Commissioner Kimura speaking for the record. Steve, I just wanted to clarify that the recommendation to change the exemption to 50% of the assessed value for historic homes, that was in the 2014 Real Property Tax Advisory Commission report. And I think that a lot of the justification that was made in that report is actually pretty reasonable.
We agree.
We're just always looking, you guys are always looking for more money, and you're hitting all our poor residents that really can't afford it. Let's go for people that actually should be a little more participatory in our tax collections.
You know, and I guess as Commission Chair, you know, speaking as the administrator, we're looking at equity, fair and equitable, you know, that we carry out certain things as such as Bill 55, you know, that is it fair for B&B and TVUs to pay their underlying zoning classification versus what they're actually using it for. So, yeah,
It's a bigger question.
I'll reside on, you know, the efforts of equity.
Yeah.
Yeah. And what that is, it can be defined in different ways, right? So, by different people, as Commission Chairs mentioned.
Commissioner, yes?
Oh,
Commissioner.
Commissioner Kimura speaking for the record. I wanted to ask regarding the tax classification rate for bed and breakfast, is that up to the commission to determine what that rate would be? Or does it go through budget and
The
fiscal
budget
services?
committee.
Communication issue.
My understanding is that this body or this commission can make any recommendation, but the rates are established by the council.
Okay.
After the classification is established.
Yeah.
Okay, thank you for the clarification.
Since we're on a roll of exemptions, I'm sorry, Commissioner Iwasa.
That's
go ahead.
okay, go ahead.
Since we're on a roll on exemptions, you mentioned the 10-year look back for the historic homes. So just exemptions in general, I'm reading from the ordinance now, 8-10.1. E, I think, is what it is. It reads, if the assessor is of the view that for any tax year, the exemption should not be allowed in whole or in part, the assessor may at any time within 5 years of October 1st of that year disallow the exemption for that year and may add to the assessment list for that year the amount of value involved in the manner provided for by this chapter for the assessment of omitted property. What does that mean then for if an exemption is disallowed, let's say home exemption, historic, whatever it is, does that say that you can go back 5 years and assess an increased valuation or disallow the exemption for going back 5 years retroactive?
Correct. I think unless clarified in that section of the ordinance, so correct. So home exemptions, if we find and have evidence or supporting information to basically cancel their exemption, we can go back 5 years. Other programs such as the historic residential and other programs, provisions or conditions within that section of the ordinance may be different than the 5 years. So like the historic res, we can go back the 10 years of the dedication, for instance. And another example is the residential use dedication. That provision allows only for current and 1 year back.
Yeah, I'm sorry. So this is Commissioner Kamikawa. So to follow up on that, is there any room for, I guess, mitigation? Because sometimes, you know, it's not the homeowner's fault, you know, as far as taking the exemption or say historic, maybe they fell out of compliance the prior 2 years rather than 10 years or something. Is that within the discretion of the assessor?
I'm not sure if it's at our discretion. So in other words, if we carry out whatever conditions of that provision or condition of that particular exemption, because in other words,
Can you
I think
disallow-
what I'm trying to, I guess, digest what your question is that if we have discretion to deviate from the, from the.
5 years. No, going back 5 years, do you have discretion to go back 4, 3, 2, or just for that current fiscal year?
I think if we have supporting documentation, we'll go back that far. So in other words, if we can go back 5, but we only have evidence or documentation to support rolling back to 3, we'll do the 3 because we have evidence or supporting documentation to make such decision. So in other words, even if we can go back 5 and it's not supported to go back to 5, we have documentation to, so, or we can just cancel from that particular year moving forward. So it depends on our findings and true investigations and research. And that's done by our compliance people as well as appraisers as well.
And how does that compliance issue come up normally?
We have neighbors, we have people that say, hey, this guy is living here, a person is not living here, and we notice on the website that they're claiming a home exemption. Can you investigate this claim? And, we do. We send out letters and whatnot.
Same thing for omitted property. How does that trigger a reassessment?
Omitted property meaning that it wasn't on the records?
Yeah.
Yeah, so
yeah.
we can go back.
You can go back how many years? Indefinite?
Yeah, indefinite.
And how does that normally come up then?
Typically, if we have some kind of lease, most situations we have, and I'm not sure if this body, we talked about state leases, but state leases oftentimes are not recorded, so we don't get the bureau documents, but we get it later, and sometimes 5, 10, 15 years later that we have evidence that they've been utilizing a property, and then that's not on our records, and then it's now on our records, and it's considered omitted properties. Now, if we have information or documentation that they've been using the property from X date, that's when the date starts. Taxation.
Sometimes though, the taxpayer is not aware of that.
Yeah.
So is that fair?
Yeah, you're an attorney, right? I mean, so we've had challenges.
Don't
as
tell
well.
me to appeal that.
No, but right. So there is a provision or condition in the ordinance that allows us to add omitted properties from the documentation or evidence that supports such date.
Okay. I was afraid of that answer, but thank you for the answer.
Yeah, no, yeah, we've had people that, yeah.
Okay. Thank you for indulging me on that.
That's
Any
fine.
other questions, comments? Yes, Commissioner Iwasa.
Yeah, Natalie Wassa. Just a point of clarification. So each of the committees now, I believe, has made recommendations. Are we going to vote on those to see what is included, or what? Can you
Yeah, I think
explain
we're
what the
gonna,
process is?
Yeah, let me finish with the rates
Okay.
committee first. So I'll ask Commissioner Kimura if you feel your committee can come up with a draft report by the next commission meeting to share with the commissioners November 7th.
For the historic homes?
No, all your recommendations, proposed recommendations for the committee.
Yes,
Fine.
yes.
The same,
Well,
same as the valuation committee.
Yes, we can.
Okay,
Thank you.
Yes,
There's another issue I want to talk about.
sure.
Credit
Commissioner Iwasa.
unions.
Yep. No, excuse me if I just interject. So along the credit unions, so it may have been in the 2014 report, which council took action sometime. So with the recommendation of the commission, I believe that the credit unions, I forget what the mechanism was or what the bill called for, but the end result was the credit unions no longer paid a minimum of $300, they pay $1,000. So I don't know if that, I'm sorry, is that what you?
No, and what I want, now I have another question. Credit unions are getting larger and larger, and smaller unions credit unions being taken over by large conglomerates. And they have buildings, they're building their own building, and they buy a building, right? Now, when there is a there's a building there that's under commercial use, they pay commercial real property tax, right? When the credit union goes in and buys that building and puts their operation into that building, they pay only $1,000.
Yeah, if they qualify under that, assuming they qualify under that section.
Under
of
the credit union.
Correct.
Which means the city loses on the commercial property.
Yeah, one could look at it that way.
I just wanted to know that because I'm seeing more and more of that, and I was just very interested in it because we had discussed it in prior real property commission.
Yeah. Along the lines of compliance, so we would grant or approve an exemption based on the paperwork submitted. However, that does not preclude us from not following up that they're adhering to the conditions of the exemption. So in other words, if they're saying the operation stuff, but they sublease out to somebody else, then that's a violation could be a violation, I'm saying. And then we would have to investigate.
Mr. Chairman?
Yes.
Scott Higashi. I think on this subject, credit unions, I do recall, I don't think it was the last commission, but it was the one before that. I just don't see how credit unions are, at this point in time, distinguishable from other financial institutions. They perform the same services. They call them members versus account holders, but I think that's window dressing. I think that I would ask that the Committee on Rates and Classifications consider including the recommendation that credit unions be taxed at a regular commercial rate like any other commercial enterprise.
Yeah.
Commissioner Iwasa, thank you.
Natalie Wassa for the record. So Amy and I were both on the original Tax Commission, Advisory Commission. Back then in 2011, as I recall, there were 72 credit unions. The cost to taxpayers was about $2 million. And now, even though the tax has increased to 1,000 from 300, it might have even been 100 back then. I don't remember. But now the cost to taxpayers is $3.1 million. And if you're interested, I did a lot of research on the credit unions and how they initially were set up to benefit the low income. But nowadays, even banks have more services for low income than some of the credit unions do. So I highly support that recommendation. The other one I do support that was mentioned is the child care facilities. And that was another one we had recommended that exemption be removed because it's a for-profit entity. And so there was even a discussion back then about how those several, at that time there were 3, now there are 11, how they could form a nonprofit, because we have that whole category for nonprofits. To single out a for-profit industry in this manner, I think, is not right and not equitable. So I highly support those two recommendations. Thank you.
Commissioner Iwasa, thank you. I understand, too, that there was a lot of testimony heard from the savings and loan industry during the 2011 Commission's
Yeah, this is Amy Hirano. And that is one of the reasons why they decided to go for 1,000. They came forward, and their testimony was, there was a huge press. Credit union press on everybody, and they pressed the council members to us to keeping their.
I'm sorry, I misspoke. I meant credit unions, not savings and loans.
Yeah, credit unions.
Because I might want to point out that in the 2014 report, that was also repeated, the particular concept, except that, interestingly, we had no testimony.
Because.
Okay.
All right.
So I just wanted to mention that, that's all. So
Chair,
any other,
I had
yes,
one more
Commissioner
question
Mente.
about the credit unions, because I know at least one building where the credit union, I think, owns it, but they are subleasing out rooms. So does that disqualify them from $1,000?
Maybe you can give me that. I mean, that's,
I must-
again, we try our best, well, I should say, we put in effort to monitor all programs, but we have 100 something thousand, right? Minus the home exemptions, there's about 10 to 15,000, exemptions. So we,
So
a lot of them go
Right.
from
Well,
policing from other people.
I'm assuming that this exemption was for a freestanding building where basically the whole operation is for the credit union itself and no other. Okay.
Yeah,
So I wanted to-
so yeah, I mean, feel free to share the location.
This is Amy Hirano again. To answer our chair's question about testifiers, I'm pretty sure that if we put it on our agenda, that our recommendation is to have credit unions pay a commercial rate, you will have many people coming here to testify against it. And they will also, it would depend on what the council's will would be as to whether they will accept that kind of recommendation.
Thank you, Commissioner. Yes, Commissioner Kimura.
Joy Kimura speaking. Stephen, would it be possible to ask if you could give us information on, let's say, if current credit unions, if they were to pay the commercial rate, how much revenue that would generate?
Sure.
Okay, thank you.
Corporation Council is looking at you.
No, I mean, because we have the values, and
Yeah.
it may or may not be
Yeah.
commercial, but I think your point is they would be
Right.
paying,
Right, right.
Okay, any other questions, comment? Yes, Commissioner Iwasa.
Just a comment, Natalie Wassa. So wouldn't that be the $3.1 million tax benefit?
I would think so. That's basically the equation, but yeah. So if you look on page 20 of our presentation, that's basically what we're saying based upon the current fiscal year or tax year. Is that what we're saying here is that credit unions, there's 77 exemptions, value of 253 mil, and the tax relief is 3.1 mil.
Okay, thank
So I don't
you.
know, would that suffice for this purposes?
Yes, thank you.
Thank you, Commission.
Thank you. Any other questions, comments on the committee's consideration? Okay, so you'll, to summarize, you'll have a draft report ready for our review
Yes, I
by
will.
November 7th. Thank you very much. So let's move on to our last committee meeting, credits and exemptions. And Chair Panes, would you give your report, please?
Sure, Matthew Panaz for the record. So our committee met 2 days ago, Tuesday, the 15th. Our review of the credits and exemptions revolved around a couple of areas. First, the ADU incentives. I believe that this is based off of Council Bill 63 from 2018. Actually, I do have a question for Stephen, if that's all right. My understanding right now is that as ADUs are built, they are assessed at the new valuation of additional, whatever that additional value is that correct? And that Bill 63 was intended to offset some of that?
Correct.
Okay, so we had discussed it with that understanding of that bill. We also discussed credits for redevelopment in low-income areas. There is just a note on the agenda. This says expanded opportunity zones. We actually expanded that to discuss low-income census tracts throughout all of Honolulu. We also discussed Bill 23 in relation to Chinatown. That's similar to what we had discussed on opportunity zones. I think that bill provides tax incentives, property tax incentives for Chinatown in particular. If property is purchased from the city. We did not discuss what's also on the agenda, that the homes were rented for 1 year or longer. But we were positive to at least the first three. We were receptive to moving forward with those as recommendations.
Okay, are there any questions, comments, discussion by anyone? Yes, Commissioner Hirano.
This is Amy Hirano. Did you discuss anything? I know there was a seawater seawater credit that was brought up at the council. Was that on the agenda, and did you discuss that at any
We did
time?
not.
Okay, thank you.
Are you suggesting that the committee consider that?
Well, there was a mention on it, but if the committee wasn't feeling it's appropriate, that's fine. I know the council didn't approve it at that point in time.
Okay. Commissioner Iwasa.
Yes, thank you. So just before this meeting, I went to the Opportunity Zone workshop that was being held downtown. And so I would like to know a little bit more about what you discussed under that. What are your recommendations? Because it's not quite clear to me.
Sure, yeah, no problem. So we believe that the opportunity zone, so this was the idea that when we had put together, is that opportunity zones right now had to be designated by the city. It's only about 20%, 25%, I think, of actual eligible low-income credit census tracts. So it's very limiting in what areas can actually be redeveloped if you're looking at low-income assistance. And so I think the idea was that if you took a redevelopment opportunity in one of these low-income census tracts, you would maintain, and you redevelop the property, you maintain the existing value of the property for a set period of time. We had discussed 15 years, and cap the amount of taxes that could be abated for a redevelopment of a property within these low-income census tracts. So actually, one of my questions for Steve would be whether or not you can track by low-income census tracts, or if you have a mechanism for that.
We probably would ask for that information from another agency. We don't maintain that type of data.
So the idea is that it's revenue neutral, so that if you come in, you're still at the existing valuation of where prior to a redevelopment, but you're incentivizing opportunities within all low-income census tracts. So that's the thought.
Okay, may I follow up on that then? So this would be not just those that are in the opportunity zones, correct? Okay. So, yeah, with respect to the timeline of 15 years, the way I understand, well, actually, so you're going outside of just the opportunity zones. So actually, my comment probably doesn't apply because you're looking at all of the low-income areas. And, well, one follow-up question on that then. When the federal government put in this program, what they used was the U.S. Census tract information. Is that what
That's
this
my
would be based
understanding,
on?
yeah.
So I think they said there were, no, I don't want to quote it. I don't remember exactly how many properties, but they did highlight some areas, and that's what the basis of this recommendation would be, using the U.S. Census tracts.
Right. My understanding with the federal bill, with the 2017 Tax Cuts and Jobs Act, the governor of each state was able to designate opportunity zones out of qualified low-income census tracts. So so the recommendation from the committee would be, well, let's not limit ourselves just to those opportunity zones. If these are all qualified low-income census tracts in Honolulu, they should all be available for a benefit.
Okay, thank you.
So carrying the theme of equity, one of the concerns I had as administrator was with Bill 2023 only afforded opportunity for Chinatown when there's other areas. So unbeknownst to maybe revenue impact, that's one thing, right? So beyond just Chinatown is what I'm bringing to the table. Thank you. Sorry for, at the end or at some point, can I say other stuff?
Sure.
Maybe at the end.
We're getting close to the end.
Yeah,
hopefully.
So, before you excuse me, I kind of just want to like put my foot in the door. That before you excuse me,
Only 1 foot, okay.
yeah, just a toe. That's fine.
Any other questions for the committee? Yes, Commissioner Iwasa.
Yeah, so just a comment then on item E, the exemptions for homes rented for terms of 1 year or longer. Again, that was brought up by me, and I am just really concerned about the renters here. And so I don't know, I guess it doesn't seem like there's much support for something like that, but perhaps Stephen can answer, you know, currently lessees who have 5-year leases can apply for, and if they pay for the tax, if they're required by their lease to pay the tax, then they can apply for a homeowner's exemption. So I just would like to know if it's possible to have a homeowner's exemption that would apply to properties that have leases that are a year and not necessarily ones in which the tenants pay the taxes directly. Is that possible?
Anything's possible,
Okay.
I guess. I mean, you know, if that's your recommendation to council, that's your recommendation. But just to, should I expand upon the program you might be referring to? Or does the other commissioners understand what's happening?
Why don't you elaborate?
Yeah, so, okay, I believe what Commissioner Iwasa is referring to, there's an ordinance that allows for a 5-year lease, and one of the conditions, and I may be missing a condition, but it was a 5-year lease where the lessee would pay, obligated to pay the real property taxes. Then that tenant may be eligible for a home exemption.
It has to be in the written lease.
Yeah, all that, yeah, and it has to be recorded as well. So one could use this option to get out of the Res A class.
Thank you.
So, and I believe what Commissioner Iwasa might be alluding to, it's rather than the 5-year, be it 1 year. Is that the suggestion?
That's my suggestion because, you know, I've seen 5-year leases rarely. The case that I'm very familiar with was on ag land, and so those leases tend to be longer in the first place. Whereas normally when you go in, you know, renting, it's a year typically.
And just to add to, and was where the lessee would not be the obligated taxpayer, right? So those two conditions, right, you were kind of offering.
Right, again, because typically the tenants do not pay the taxes.
Yeah. Just a kind of history, you know, back in the 60s or 70s, before I was born, I was born, but, you know, there was a lot of leasehold properties. So leases were a common, I guess, option. And, you know, and that's where this may have originated from, so to carry over doing that. So, you know, should it not be 15 years or may not be where, you know, so this provision was in there. It could be, but that's kind of my understanding of some of the history behind that. But yeah, yeah, it can make all kinds of recommendations.
Okay, thank you.
Okay. Anything else on this committee? Yes.
If we, for discussion purposes, if we did have a few more exemptions.
Oh, of course, of course.
To discuss. So actually, kind of going back to what we had discussed, this is Matthew Panaz. Going back to the Classifications and Rates Committee, we had discussed historic homes exemptions. Now, there is an exemption for commercial historic properties as well. Are we looking to include that as part of that review?
That's
Potentially,
something
yeah, I
that
think
you
that's
can
something that
consider.
we can,
Sure.
we should consider, as long as we're looking at the residential ones as well. We talked about credit unions and childcare. Another one that I think we wanted to discuss was alternative energy. it's a big number. A lot of the returns for alternative energy investments are about 2 to 3 years on a rate of return. And as a city, we're subsidizing those further. Maybe something that we could take a look at. Similarly, Central Kaka'ako Industrial Zone, limited development. There's 92 properties that have a exemption right now, right next to a rail line with upzoning within HCDA that the city is subsidizing. We'd like to recommend that we at least review those.
You're making more work for me.
Is it?
No, I'm just joking. Thank you for those recommendations.
So,
Wanna join our committee?
so just to interject, the Central Kaka'ako Industrial Exemption is a 10-year program, just to let you guys know.
When does that expire?
I want to say this is the 4th year,
They're gonna come in.
the third year?
Third or
fourth year, yeah.
Yes, Commissioner Iwasa.
Okay, so since we're taking suggestions, I have one more suggestion, and this has kind of been a pet peeve of mine for a long time. Section 8 dash 10.10 is in the ordinances. If you read it, it says charitable organizations, but this table that they've given to us on page 20 doesn't even list all of them, but there are things in there like business unions, labor unions, all kinds of other nonprofits that are not charitable. And so I think, and I've been trying to, and so see, there's also group care, child care centers there. But I've been asking the city council to change that definition, and that's all that would need to be done. They wouldn't have to say, take away these exemptions, just change that definition to be what is in the IRS code. And that is that, it be a 501c3 organization, and we could simplify things, and I think that would be fairer. So I put that out there for your committee to consider, Joy.
Thank you, Commissioner Iwasa. I'd just like to state that for 501(c)(3)s, they're very varied. So when we take a look at it, for example, a nonprofit credit union, for example, is considered a 501c3, but a labor union is also considered a 501c3, but it's not a for-profit entity.
Yeah. Well, let me clarify that. So there are a lot of 501cs.
Right.
Labor unions are 501c5. So they're not all C3s. C3s are mostly charitable, educational.
Right. I know our
research and
trust
things.
fund is a 501c5.
Yeah. So.
But they can't all. Well, I'm so sorry. But I guess what I wanted to say was, they're not. They're very diverse. So it's.
Okay. Well, anyway, so yeah, I think what Commissioner Iwasa is referring to on the 501c3 is that it has to be more educational and charitable in purpose and operations, as opposed to something that's not. Because you may have private schools that are for-profit, but private schools that are also nonprofit and 501c3 educational. So some are run for-profit, some are run nonprofit and tax-exempt. Some are, nonprofit for state law purposes, but taxable for income tax purposes. So you have the whole gamut there, I guess, is what I'm trying to.
Right. And so you wanted to change the definition.
Right. So just a little bit background. 501c, as the chair mentioned, there are, I think, 20 different C, 1, 2, 3, all the way down to 22, 23, something like that. And so currently the ordinance does not distinguish. It just says charitable. But it's not, the definition is not what we typically think of as charitable. So what I propose is that definition be clarified to state the same thing that the IRS code does as far as charitable, educational, charitable, scientific, there's a list. The other place that shows up in the city ordinances is under our grants and aid program, and that definition would work as well, I believe.
Okay. Thank you.
You're welcome. And I can send you something on that too if you'd like.
That'd be great. Thanks.
So Ray Kamikawa, Steve, do you have the Chapter 8 exemptions definition of charitable with you? Because I thought it tracked 501c3
Yeah,
pretty
I
much.
just was gonna expand upon the 501c3
Yeah, please go ahead.
thing. Is that in that section, it doesn't require a 501c3. So
Right.
there's exemptions granted under 8-1010 that do not have a 501c3. So just to throw that in the complexity of consideration.
Okay, but doesn't it define charitable?
Yeah, so
Okay,
yes.
can you read that for us?
Well, as Commissioner said, there's different types, so
Well, but
I don't know,
But
I
there's
mean-
a definition of charitable,
Well,
right?
if-
It doesn't refer to 501c3, but I thought there's a definition of charitable in Chapter 8. No? Or there's a subsection that tracks 501c3, charitable, educational, scientific.
it's long. I mean, you want me to, I don't know exactly what paragraph it's in.
Okay,
Oh,
can I,
Please, guys, you got it.
I'm
Oh,
not
yeah.
sure if this is. um, It's a ROH.
yeah.
Because I think there's schools, then there's kindergarten, junior colleges, colleges, and there's other fractions of.
Can I see what you're reading from?
Yeah.
Okay, any other questions? Yes, Commissioner.
So I just want to make sure that what I'm suggesting is clear. So you saw how long that ordinance
Yes.
is. And what I am proposing is that most of that go away and simply be replaced with the definition of a charitable organization, which can be found in the U.S. Code, which is 501c3.
Okay,
That
I
falls
understand.
under that category.
So that is your proposal?
Yes.
Replace that whole charitable section with only organizations that qualify under IRC 501c3.
Yes.
Okay,
Thank you.
okay. Commissioner Panez, you understand that?
Yes, I understand.
Okay. We're not saying we adopt that right now,
Right, I
right? That's
understand.
for
I understand.
future discussion, consideration. Yes?
I now I have a question, I guess, as administrator. Just earlier, Chair kind of spoke as if he was the DOTAX director at one point. So I don't know. I mean, I just saying that.
What did I say?
It sounds like you may have a high level of understanding that I may not possess as far as the ramifications. Should we or should the commission adopt such recommendation, as far as only 501c3? So as chair, or maybe knowledge from previous experiences, would that work, or would you have to digest the qualifying other organizations as far as schools, churches, cemeteries, properties of that nature? That's
Well, no, I practice in the area of nonprofit organizations. I apply for exemptions with the IRS as well as the state, not just 501c3, but all the other 501cs. There are other exempt organizations, right, under other provisions of the Internal Revenue Code not relating to 501c. I just have to say, I'm not ready to speak for or against the proposition. I'm just saying that it would limit the number, the kinds of organizations that qualify for a real property tax exemption, because a 501c3 organization is pretty tight as to the kinds of organizations that would qualify. And that's just reading the statute and common sense, I think.
Right, so Natalie Iwasa again. Some of those that are very detailed in there would qualify. For example, the private schools that are charitable typically fall under the 501c3 category. I think there are 501c4s, which are entities that are that may do more political stuff. There are labor unions, there's business unions, there are a bunch of different nonprofit organizations currently getting this exemption under 8-10.10, which are labeled charitable. That's what this code section states, but they're not really charitable. So that is why I'm making this proposition, and if the commission doesn't decide to go forth with it, that's fine, but I just wanted to put that out there.
Okay. Thank you, Commissioner. Are there any other questions, comments? Okay, so I think we understand that proposal. So before we start wrapping up, Steve, you said you had something you wanted to say. Please.
Yeah, no, thank you. And just allow me a little explanation and little leeway here. I didn't want to come across as being uncooperative, and my message when I read from my script was I wasn't going to answer questions because I felt it would maybe, I forget what I actually said, complicate and jeopardize. And I think what I'm now reflecting here is that I'd rather not speak generally because things may be taken out of context for actual specific cases. So I apologize to Commissioner Higashi in an email saying that, the recourse for a property owners is not just to appeal, is to call our office. And we'll talk about specific properties or specific evaluations with the appraiser on a specific property. I don't know if that makes sense. I'm just trying to qualify the differences, what answers I was willing to answer and what I wasn't willing to answer. Is that we'll talk about specific properties, on an individual basis, but it's hard for me to encapsulate everything in a general statement as far as explaining the appraisal process, evaluation process. I don't know I just thank you for allowing me to say that, and hope that makes sense. And if you got any questions along those lines.
Any questions? Thank you. Thank you, Steve.
No, thank you for that.
Okay, so this is the final call for any other topic or issue that a commissioner would like to present for discussion, because we're heading into our last meeting. At this last meeting, we're hoping to have the reports and recommendations of the committees for final adoption or rejection by the full commission. Okay, so that we can start wrapping up and drafting our final report. Yes, Commissioner Hiwano.
Question. You're saying that our report for in the November meeting, we will have proposals. Will we be voting on those proposals so that they then become our final report?
That would be voted on as a recommendation to be included in our final report.
In December?
Right. And the report is up to us how we want to frame it. We can also have a report that says we considered but rejected as
yes,
well.
Of course,
right?
of
Yeah.
course.
So
of course.
it's up to the committees on how they want to present their report. And then
Right.
for the full commission
Right,
to decide on just the general approach.
Right. And then at that point in time, for example, if a subcommittee says we oppose, et cetera, and the full commission says, no, we support it, then we would take a vote and the majority will win, right?
Well, we don't want to say win or lose, but the majority will carry the day. I've never seen a report where you have a dissenting view, but I don't think anything.
No, but what I'm saying is that
yeah.
you're saying that our November meeting is going to flesh everything out.
Yes,
For our
yes.
December final report.
Hopefully, and then you'll compile the report, I guess. Or are you volunteering? I guess
We will
not.
then have a compilation, Ray, then we will then have a compilation report in December to present to the council, right?
Right, but see, I'm missing, based on what we did before, we went through a few drafts before we finalized the report, so we still need time after that to review and comment and edit.
Right.
Outside of the formal meeting, and, I guess that's just how it has to be.
Mr. Chairman?
Yes.
It's Scott Higashi. When we had the 2017 commission, we did ask the chair of the council for a little more time to finalize the report because of this very same issue, that the commission needed more time to review. So it is something that I think can be submitted to the chair of the council for consideration. Obviously, the chair doesn't have to act on it, but because the commission's charter, I think, runs beyond December, even though the report's due in December, the commission remains an active body technically and legally beyond the the imposed report deadline. So one consideration could be if we are unable to come to an agreement on a final report, we could ask for more time from the council chair.
Thank you for that suggestion. Yes.
Amy Hirano, are we just supposed to have just one meeting per month?
Well, that's the schedule, but we don't have to.
Who determined that schedule? Right.
I don't want to point fingers, but it was a suggestion. Yes,
I'm not sure if I informed, but I might have mentioned something to Randall that I'll be off island on November 7th.
November
I think there's
7th.
another one scheduled for 21st for some reason.
21st,
And I'm actually on vacation today.
November 21st.
Oh,
Thank you
So-
for coming on your vacation.
yeah.
Thank you. You're welcome.
Okay, so we have November 7 and November 21,
21st.
21st. Oh, okay, well,
Thursday.
that helps. Okay, then we have then we can anticipate a combined report for the November 21st meeting. Oh, sorry. Okay. Okay. Oh, my mistake, sorry. Okay. Okay, so, okay, no other issues, comments, reports, suggestions for topics? Okay. Again, goal would be for the subcommittees to compile draft reports for posting on the commissioner's next agenda. And so we'll have a detailed agenda, and that's got to be done like the week before, right? To give Randall time to post the agenda with the appropriate details, so.
Yeah, the agenda should list those issues that we're going to be discussing.
Yes. Yes, affirmative. Okay. Next commission meeting is scheduled for November 7, 2019, 1:30 p.m. in this council committee room. At this meeting, the committee will, I already said that. Okay. And the final meeting, which I didn't see, was November 21, 2019, which will be to approve the report that will be submitted to the city council. And hopefully we don't have to extend. Are there any other announcements, Randall, that we need? Okay. Commissioners, if there are no objections, then this meeting is adjourned.
Thank you.
Thank you, everybody.